Okay. Good morning or good afternoon, wherever in the world you are. Thank you very much, Fastmarkets, for inviting me and Rodney again to speak at the Fastmarkets conference. And this time we're going to speak again, as I did last year, on financing a lithium project. Why am I qualified to talk about such topic? Well, RK Equity has been in business for over 20 years, and the last 11 have focused very significantly on battery materials developers and have been affiliated, or advisor to or invested in a number of big successes like Piedmont, Western Lithium, and Lithium Americas, and most recently Piedmont Lithium. Lithium I wrote about for Crux Investor, a news portal for mining, that lithium's a noble investment pursuit. It won the Nobel Prize for chemistry, these three gentlemen, a 30-year overnight success based on the killer app, which is the lithium-ion battery, which is powering the energy transition through EVs, solar, and wind, grid storage for those. But the industry still is small, still about $3 billion, which is up a lot, 3 times from $1 billion when I started this, a few years ago. But it's opaque, nuanced, secretive, tiny, but it's in ludicrous growth mode. And we've gone through a bust. I thought in 2016-17 that we had a secular super cycle that was going to last 10 to 15 years. I wasn't expecting to have a 2.5-year bust, but I'm calling this last bit Lithium 2.0 after the Lithium 1.0 false start in 2009 and 10 with almost famous Lithium 2.0, Penny Lane, if you know that movie and that character. You have the ASX non-integrated spodumene producers all down at the beginning of this year, and you had Nemaska go bankrupt, and then you had the Argentine favorites, subject to Christine Argentina, in the year of the pig, Neolithium, Millennial, and others faltered significantly. Albemarle is the lithium proxy. It's the #1 lithium producer in the world. It's a big market cap in the US, and in the top of Lithium 2.0 in 2018, it hit $140. They looked very smart, having bought Rockwood, at around $70 a few years prior to that. But since then, they have faltered significantly as trade wars, the reduced China subsidies, and COVID-19 has resulted in a fall in the price. But it looks like we may have bottomed, and we'll see if we're right about what we're articulating here, that Lithium 3.0 is underway. I think Albemarle's best years are yet to come. What are the lessons learned from almost famous Lithium 2.0? If you can, sell to Albemarle. Mineral Resources got a great deal for their Wodgina hard rock asset, selling 60% and also getting a free carry of 40% in Albemarle's Kemerton facility in Western Australia. So that was like a $2 billion windfall for Mineral Resources, which I think ultimately will prove good for Albemarle, but it was a high price. Likewise, if you could do an offtake with Tesla or with Japan, that's also a recipe for a good cost of capital. So Kidman had a binding offtake with Tesla. They also had Mitsui as an offtake partner. They ended up getting bought by Wesfarmers. Orocobre, I've spoken about in the past, has Japanese partners and have had very good cost of capital, low cost debt as a result of that. And likewise, Sigma is partnered with Mitsui and managed to get cheap debt funding, which I'll talk about shortly. There's a big debate as to whether or not lithium is a commodity or is it a specialty chemical. I believe it's a specialty commodity, and I believe that carbonate increasingly is being seen as a commodity, and hydroxide much more so as a specialty. I recognize that carbonate, there are different grades for battery grade and non-battery grade, but even within the most stringent battery grade carbonate, it's far less a specialty than it is than hydroxide is. China certainly treats spodumene and carbonate as a commodity. The last few years has definitely shown that. And if you are a project that's 100% China reliant, that kills equity, in my opinion. Spodumene ramps fast. SQM, low quality carbonate, ramps fast. It's survival of the fittest. If you have high cost secured debt like Nemaska did, Alita or Altura, the lenders make a killing, but equity gets killed. Think about mine more nickel and Elon Musk. That's hydroxide special. That's where the money is. The USA OEMs demand lithium hydroxide. This is a map of battery and EV factories, hydroxide focused. EU demands hydroxide. Albemarle betting big on hydroxide. You could see the transition from legacy, carbonate focused to advanced hydroxide focused, and even in next frontier, more hydroxide focused. Number two, Ganfeng, they're winning big on hydroxide. Converted from hard rock in Australia, Volkswagen and BMW are saying they are getting a secure, sustainable supply. In BMW's case, getting 100% of their hydroxide from hard rock from China. Lithium 3.0 with 2030 vision. Before Battery Day, these were our forecasts. Approximately 2 million tons of LCE by 2030. That's 1.7 million new tons. That's more than 6 times 2019's production. That's 20 new Wagenas and 50 new 20,000 ton hydroxide plants. You add in carbonate, it's even more than that. Hydroxide is accelerating to 60% market share by 2028. We think it'll be nearly 2/3, and we think, in contrast to some people calling these a balance between carbonate and hydroxide, we see it tipping to hydroxide as early as 2023, 2024, as a result of 40% CAGR for hydroxide. We see a hydroxide shortage as soon as within 12 months. My partner Rodney Hooper, who puts together these slides and this data, thinks that the carbonate shortage will be materially later than that. Again, focusing just on hydroxide, so that 50 plus plants needs about 30 billion of CapEx. This is at an average capital intensity of about $30,000 per project. That's for a project of about $600 million, for 20,000 tons capacity. That's kind of a ballpark, mine, if it's a mineral project, a mine plus a conversion plant. And similarly for a brine project, we think that ballpark is about accurate. So that was all pre-Battery Day forecast. Post-Battery Day forecast, we haven't really upgraded them, but if you think about terawatt demand, 1 terawatt on the left-hand side of this chart compared to the 150 gigawatts from the 2018 Gigafactory, if Elon Musk is talking about 3 terawatts of cell demand, this is ludicrous lithium demand. And as a result of all of that, lithium equity animal spirits have woken up. Over the summer, I believe we have entered lithium 3.0. The Tesla revolution, the EV revolution, is rocking USA equity markets. The quintupling of Tesla over the summer and their subsequent raise of $5 billion and 4 quarters of profitability, they're reporting today, we'll see what happens there. But the fact that they raised $5 billion enabled them to take off the drawing board their battery plant development, their cathode plant development, and their hydroxide plant development. A lot of things that were in the works, they're now hitting the bid on so that they can hit that 3 terawatt vision for a sustainable future. A lot of Tesla's rise has been driven not by institutions, many of whom have been short, but by what I call Jane and George battery pack. Robinhood investors, free trading, have massively increased liquidity for many tech stocks, but very much so the EV thematic. These are 3 highly prominent, advocates of Tesla as examples of this phenomenon. Galileo Russell, Cathie Wood, and Steve Mark Ryan. As a result of Tesla's quintupling, we've also seen a massive increase in special purpose acquisition companies go public and merge with companies generally in the US capital markets, but within the EV thematic, it's been enormous. So $6.4 billion of equity has been raised over 3 months in the summer at an average pre-money valuation of $1.7 billion and an average 2024 EBITDA of 16 times. This included California Rare Earths Mountain Pass return to the market, at a pre-money valuation of $1 billion, raising $500 million. That company is actually producing, generating revenue, and has small EBITDA. Almost all of the other companies on this list, including Fisker, which is run by a failed entrepreneur, Dutch entrepreneur, Hendrik Fisker, is back in the market again with largely a whiteboard, prototype of an SUV. And he's told the market will have $2 billion of EBITDA in 2024, and the market has given him $700 million. So I'm thinking out loud, what's more rare, another prototype like a Fisker or a Nikola, or let's say Piedmont Lithium, right, or another world-class, mine in America that is kind of irreplaceable. So how do you secure a sustainable lithium supply for the US and the European market? Pre-battery day, I wrote in May, like, which lithium company might Tesla buy? And I'm taking some credit for this rise in Lithium Americas and a massive speculation that has come in. But just look at the monthly volumes increasing from April, May, June, July, August. The volume on the New York Stock Exchange has increased enormously. It's helped increase volume on the TSX, but as a percentage, it's US retail that's driving this. And as a result of that Robinhood retail pumping up the volume, Lithium Americas just announced yesterday that they're putting in place $100 million at the money ATM financing, which basically enables them not to even do road shows, just like tap in whenever they want to the liquidity on the New York Stock Exchange and raise $100 million, which I think at the very high valuation that they are is a smart move to shore up their balance sheet, which has significant secured debt to Ganfeng. But the big story was not Lithium Americas and clay in battery day, despite the fact Elon Musk spent 2 minutes talking about clay. He spent 20 seconds talking about what was far more important. And it's what I'm calling these glory battery days, born in the USA, Tesla lithium hydroxide. So OEMs, we're always asking, when are OEMs going to come in and invest in the space? Tesla's taken matters into their own hands and have said they want a short, secure, sustainable supply chain. And they're building hydroxide in Texas, sourced with very close proximity, plain vanilla spodumene from Piedmont Lithium. As a result of that, they are reducing, think about the metric that they're focused on, an 80% reduction in kilograms per kilometer to ensure a localized supply chain. This is the way of the future, in my opinion, and the big story from the battery day. So this is a real deal. Piedmont is a binding contract. It is a fixed price. It is only for 5 years and about a third of their production, with an option, to get some more. But this is a bit of a supply agreement partnership and an important development. This is not like deals that Tesla has done in the past with NORA or Pure Energy. It's more akin to what they did with Kidman binding, but in this case, it's for spodumene. So very excited, and people should be taking this very seriously and watching, the development of both Piedmont and the hydroxide plant in Texas as a model for things that might happen with some other OEMs. As a result of all of this activity, lithium developers have been recharged. You can see on this chart all the green on the month to date and since September 1st, as well as year to date. And very significantly, our USA assets, Thacker Pass and Piedmont Lithium, are now the top 2 development assets on the Mr. Market scoreboard. And if you look to the right, you'll see the aggregate market value of hard rock deposits is significantly higher than clay brine and DLE brines. And the clay is inflated by the Thacker Pass at 918. This is my own analysis, but in general, the market is saying they're looking to hard rock. And in North America and USA, as well as Australia, that the market caps of the companies on the scoreboard there are more significant than in South America and elsewhere. Why is this? Again, it's the hydroxide surge. It's the hard rock is the preferred feedstock. I know there's clay, I know there's DLE, and I know there are brines, and I believe that we need an all of the above strategy. But when you look at Volkswagen and BMW and Tesla, they're voting with their wallet, for hydroxide because of nickel intense applications. So I call it sexy nickel. It's the Model S, 3, X, and Y, as well as massive nickel in the Cybertruck and the Semi. And if you saw the Hummer, GMC just yesterday, that's a 200 kilowatt hour battery, also massive nickel, using LG Chem Ultium batteries. That's going to be hydroxide focused. The clay, I call this musky waters, hoochie coochie man. I've done an interview on Ivan at EV Stock Channel. I'd encourage you to look at that. But this, I believe, is not particularly serious. A little advertisement for RK Equity and our new YouTube channel, Rock Stock channel. We've done 4 videos, and we've just launched actually the 5th, which is Albemarle throwing mud at Elon Musk. This was a summary teach-in that Albemarle did at Jefferies, which I synthesized. And we're relaunching the lithium ion rocks in video format in addition to audio. And we're bringing back one of our most popular guests, Garrett Fueling, who worked at Albemarle nearly 30 years and offers a perspective from both hard rock and brine. And I would hope maybe Fastmarkets one day could have him speaking at this conference as well, in contrast to, I guess, some of the other experts they've had historically. So this month, the amazing Spiderman returns. I call Eric Norris of Albemarle Amazing Spiderman because he loves these spider charts. In that Jefferies teach-in, he talks about resource grade, scale, and chemistry being the 3 most important factors. And in resource conversion, is there a commercially proven technology to make battery grade materials using this resource chemistry? This is how Albemarle views the world. And they were basically, again, throwing mud at Elon. This chart is basically massive pushback, in my opinion, basically saying that Albemarle is validating their strategy, hydroxide rocks with the top line spodumene going, from concentration to conversion, all of those pluses on the right-hand side, lithium yield conversion, cost variable, capital conversion, water intensity, and the like. As you move further down, clay, much less proven, pilot or development required, or lower yield or more water and energy intense. But I believe in clay, and will 2021, will clay have its day? I think back in NORA, if you look at Albemarle's chart, they're basically saying the Sonora process is the most proven. The sulfate roasting and water leach, is again the more proven way to go. Lithium Americas, the sulfuric acid leaching, they're suggesting is more at pilot stage. And if you think about what Elon Musk said, he said that his clay process would be acid free. So I think that's a little bit of a swipe at the acid process that Lithium Americas is using, but I guess to be seen. But Bacanora is permitted. Lithium Americas still needs to get permitted. Bacanora is partnered with Ganfeng, and Ganfeng's talked this up not only for brine, but potentially they could use, they can convert to hydroxide and use Mexico, to sell into the U.S. We'll see about that. From a pure valuation perspective, Bacanora is trading at something like 5 or 10% of the value of Thacker Pass in my estimation. Lithium 3.0 is underway. How do we finance? So this is a quote from John Latinsky, the CEO of MP Materials, which did the SPAC with Fortress. He basically said, we only need $170 million, but we're going to raise $500 million, and we're going to have no debt. We've positioned the capital structure in such a way that's appropriate for the business. The leverage will be in the price, not on our balance sheet. He expects NdPr, that goes into permanent magnets, to rise. In a similar way, I believe lithium prices will rise, and I believe not having a lot of debt and as much as you can having equity bulletproofs the balance sheet, and I would focus on companies that are not highly geared. So how do you get a not highly geared company, right? US equity rocks, cultivate USA retail as well as institutional, and list in the USA. It's no secret that Lithium Americas and Piedmont both have the highest valuations now. They're the only ones that are fully listed in the US. I gave Western Lithium and Lithium America advice strongly to list in the US, a number of years ago, and they said it was the best advice that I gave them. I gave them that advice because I was given that advice by Keith Phillips of Piedmont Lithium, who implemented that himself, for Piedmont, and I've been privileged to be associated with that success, which has their best days to come. Back to keep it simple, stupid. This is one of my famous monikers. So from a lithium project developer checklist, I put up a similar data points last time, but just think about it. Project execution matters. Off-taker credit quality matters. Thinly capitalized Chinese offtake partners are problematic. Sovereign risk matters. Look what's happened, in Argentina and also in Chile. Geographic proximity to end markets matter. Elon Musk has basically said so. 80% reduction in kilogram per kilometer. And brine carbonate is hard, but will be needed, but it's a long time to test, permit, finance, construct, ramp, qualify, scale, and cash flow. Just look at Orocobre and look at LAC. LAC is now talking about 2022 production. When they merged with Western Lithium in 2015, we were talking about 2017 Coochie production. So what's a good project? 20,000 tons hydroxide preferred. Carbonate still okay, but 20 years, 500, 600 million CapEx, 6,000 OpEx or lower. Proven technology by 2025. I do believe in new technologies. I don't believe most of those are going to come until post 2025, but with a 2030 vision, both improvements in technology, but also a rise in the cost curve, right? It's going to happen, and new technologies, which may be more expensive for lower quality assets or unconventional assets, will become economic as the price of lithium hydroxide in particular rises. Jurisdiction matters, mining friendly, tax friendly, predictable, et cetera, all the same thing. And competent management with the skin in the game, preferably focused on non-China supply to feed non-China demand. That's my principal focus. So what's KISS? KISS, clean all equity capital structures. Those who saw my presentation last year saw I talked about Madonna's Material Girl, like a virgin. Well, look what happens when you're touched for the very first time by Tesla and Piedmont Lithium. ESG has become very important, and Sigma has been a leader in this regard, but it's very notable in the bottom of the spodumene price market, Sigma managed to get 5% low cost, sustainable financing for hard rock mining. At, again, 5% by Societe Generale. The fact that they had a Japanese partner certainly helped. The quality of the project, and the low cost nature of it also helped. Pilbara Minerals replaced their 11 or 12%, Nordic bond with 5% interest with BNP. And the Clean Energy Finance Corporation in Australia came back into, that deal. So it shows that much lower cost is available. In the case of Pilbara, they're more China focused, although they have a relationship with POSCO in Korea, but they were already in production. They were managed to meet their interest payments, but when it came time for their principal payments to come due, and they would have been in a bit of a pickle, they managed to refinance at 5%. So that's an important development that French banks, are lending. Different strokes for different folks. Okay, this is a somewhat busy slide, but it is Rodney's view and my view that a minimum incentive price of $12,000, probably maybe a bit higher to 13, 14,000 for battery quality hydroxide is needed to incentivize supply. Hard Rock Rocks, Pallinghurst and Traxys have finally, managed to take over what I call new Masca with $600 million of equity. That certainly should be good for Wabuchi. We'll see what they do on the downstream conversion side. I've put in here $50 million, equity deal. Piedmont's in market today. By the time you see this, we'll know the outcome of that deal. But they had raised $20 million earlier this year at $6. This is going to be at meaningfully higher. It shows you what happens when you get a good partner like Tesla. In Europe, Ches, this is John Kanalitzis of Lithium Americas once said that lithium is weird. If you look at the companies on this table, they're not the usual financiers of projects in the mining space. So you have a utility, a 70% government-owned utility, Ches, financing $32 million European Metal Holdings to a final construction decision by the end of next year and taking 51% control. European Metal Holdings, that's a Zinnwaldite, kind of mica project that it has 2/3 of the resources in all of Europe. So could this be a European Piedmont at some point, or will Volkswagen or German and European see the hard rock to hydroxide route through this project? That's to be seen. In Argentina, Livent and Orocobre did some financings, which were relatively dilutive. Orocobre just raised $100 million of equity. That was probably the lowest equity price that they've had to do, for the first time in their financing of the whole project or the company have, it was relatively dilutive. But a smart thing to do. The uncertainties of COVID in Argentina, you just don't know. And they are aggressively expanding through stage 2. And then Livent had to replace their revolver with longer term credit because they were running into debt covenant problems, but they didn't get a great interest rate, and it was convertible at $8. So funding is available for producers, but relatively expensive in Argentina. In the DLE space, Aramet, I'll mention, $165 million invested. That was the most money invested in any DLE project, and they wrote that project down. They have not advanced that in Argentina, but Lanxess is next up with Standard Lithium, proving the concept in Arkansas. I'm very hopeful that there'll be a success there because I believe that there are very good DLE projects that should emerge, including E3 Metals and their partnership with Livent in the Alberta oil fields. And Vulcan Lake, Lilac, Cornish Lithium did a crowdfunding of $6.5 million. Money's been thrown at this in small sizes, sub $10 million. I call it DLE R&D. In Argentina, I think we got, Neolithium got an 8 million Canadian check from CATL. I consider that to be, kind of like an option. There haven't been much other financing in Argentina, but I believe Argentina, for the most part, in terms of a new build outside of Livent and Orocobre, it will be mostly China focused, like Ganfeng and LAC, which is focused on the carbonate market and lowering themselves on the cost curve for carbonate as they use their hard rock resources for hydroxide. I've talked about clay. Will clay have its day? Back in NORA, Ganfeng. Again, my preference, Thacker Pass, to be seen. Ioneer, has attracted a billionaire, Centaurus, John Arnold, who's also one of the backers of the clean energy, coalition that invested in Vulcan. That project, we'll see what happens on the buckwheat side. I think they'll get over that, from a permitting perspective, but that project won't be hydroxide until 2027, right? It's very interesting boron. It's used in a lot of, other applications that are, for this new economy. But we'll see what happens, but that's an all equity structure, and I wouldn't bet against their ability to get financed in the next number of months. Yadar, I question whether or not Rio's committed to that, but they say they are, with $200 million doing detailed engineering. So I'll conclude with this slide. These are questions for 2021. Will Volkswagen follow Tesla into lithium hydroxide production? Will Northvolt, what are they going to do? They had offtakes with Tangxi and Nemaska for hydroxide, and with them not delivering, who are they going to partner with? Is there a European Piedmont, potentially in Savannah, as well as the Sinovic project of European Metals? Savannah, similar to Piedmont, has both feldspar and quartz byproduct, in a spodumene deposit. Will the European Investment Bank write lithium hydroxide checks in the way that they're writing checks for battery plants and cathode plants? Will the U.S. Department of Energy, will we bring back, if Biden wins, a lot of the funding that happened under, the Obama administration, including a hydroxide plant for Albemarle, Rockwood at the time? Propulsion Quebec, will critical elements, follow in Piedmont's footsteps in Quebec, or what will happen with, again, Nemaska with Pallenhurst and Traxys? And finally, what will Wesfarmers and SQM do? Q1, they said, will they, go ahead with their Western Australian Mount Holland integrated plan? And then how do we view Western Australia and China versus conversion in the US and Europe? Again, going back to Tesla, 80% reduction in kilogram per kilometer. And finally, will Western Australian spodumene consolidate like iron ore? Rio Tinto, BHP, and Fortescue, I believe, are all in the Talison kind of Greenbushes data room. I don't think they're going to, win, but they'll learn a lot. And will they participate and, like in iron ore, consolidate, or will Mineral Resources participate in that? And this will enable, I guess, greater balance of power with the spodumene producers, so they won't be killed like they have been for much of the past 2 years by, their Chinese offtake partners. And finally, I conclude just with a reminder of, our YouTube channel. Please subscribe to Rockstock channel and watch our upcoming videos. And as always, nothing that I've said here is financial advice. You could read this disclaimer.